Hello everyone and welcome back to another episode. Listen, I want to clear up any confusion there may be on the interest rate issue, okay? A lot of people have an interest rate issue when it comes to their lines of credit and utilizing it to eliminate their mortgages. But you need to realize that the money and the interest that you are saving month to month by doing the velocity banking method far outweighs the interest that you pay on your line of credit while eliminating these different loans, okay, simultaneously. And so to give you an illustration of what I'm talking about and how that velocity banking is actually the best way to pay off loans, to increase your cash flow, and to enhance your credit, I want to give you what I call an elementary lesson in numbers, okay, and which one is bigger. So this game is entitled, Which One is Bigger? So let's say we have 6 and 21. We were always taught in school, right, that 6 is less than 21. Is that right? Okay, we were always taught in school that 0, right, is less than 30, right? Okay, now let me show you something. Let's go ahead and change this number. What if I put a 1 here? Is it still less than 33? I'm going somewhere with this. Yes, right? All right. So we see that 1 is less than 33 and 6 is less than 21. However, what if this 6 was a percentage and it was amortized interest? And what if this 21 was a percentage and this was simple interest? Which one is greater now? Yeah, that's right. Now we see that 6 is actually greater than 21. Why? Because of the calculation. Because of how that 6 is calculated. Now, down here, what if I said this was 1 degree Celsius and the 33 degrees Fahrenheit, right? Which one would be less? Who cares? We're not interested in temperatures. We're interested in the percentage. So this is what I want to do, okay? I want you to realize that when you are implementing the velocity banking method, you are swallowing up amortized interest and you are getting rid of scheduled payments. You see, on the amortized interest side, it doesn't matter how much you pay towards your amortized interest. You're still going to be scheduled out at $1,200 a month the next month, right? You can spend $3,000 on the principal, $10,000. Guess what? It's still a scheduled payment the next month. Whereas with a line of credit, what does that principal do when you start just hammering away at it? It goes down. And each month that minimum payment goes down, right? It's not a scheduled payment like it is on the amortized interest side. And so we want to make sure that any time we are faced with interest rates, say, wait a minute. And we have to have this mindset. How much money am I saving? Yes, there may be a $3 charge. Okay, I'm not making fun of anybody. Yes, there may be a $50 charge each month. But I'm going to pay it off in 3 months, so it'll only be $150 in interest, and I've saved thousands utilizing my credit line to pay off my loans, my student loans. Huh? Because the simple truth is, folks, interest rates are nothing to be afraid of. If you take 0.20, okay, which is 20%, and you multiply that by anything, let's go ahead and say you have a car that's worth $5,000, okay? Remember how I like to do math, okay? I like to do math like this. 5,000 multiplied by 0.20, okay? And I like to what? I like to count the zeros. How many like counting zeros? I like counting zeros. Look at this. 1, 2, 3. Then we have 2 multiplied by 5. Remember that? And then that's 10. Okay? And then you got 1 decimal there. And so we have 20% of 5,000 is what? 1,000. 20% of 5,000. 1,000. So you have $1,000. So let's say that the interest was 20%. Okay? So that's $1,000. But guess what? That's per year, folks. That's per year. And you get to borrow, right? You get to borrow how much? 5,000. And so is it a big deal that, let's say you kept the $5,000 for the whole year? Is it a big deal that you have to sacrifice $1,000? No, you're doing something with this 5,000. You're growing your business. You're growing your mind. You're growing. Interest is nothing to be afraid of, especially when you know how to use it in your favor. You can put that toward a loan, okay? You can put that toward a loan principal, and then what happens to the loan principal? What happens to the interest after you hammer that loan principal? Let's say the loan was $10,000, but after you hammer that loan with $5,000, what does the interest have to feed off? It's got to feed off the $5,000 and not the $10,000. You see, you get rid of the principal, you get rid of the host, you get rid of the parasite, you get rid of the principal, you get rid of the interest. And that's what you can do with your lines of credit. And it doesn't even matter if you don't have a line of credit. You can do the same thing with your retirement account. You can put that retirement account, you can financially allocate it, okay, towards those loans, pay them off, okay, have more cash flow coming to you, pay that loan back that's in your 401k or whatever. Okay, we have a variety of things that we can do, but man, this is just the start. I thank you so much for coming with me on this journey. Do not be afraid of the interest rates. I just got a comment. This was for you, Marcus. God bless and have a great night.